guess I got lucky. So I actually loaded up on all entirely puts. And then we gapped down that Monday and I was up probably like 250, 300%. And I had like, I think 10 of the triple Q puts at 226. Shark always said sell half and then let the rest ride with a stop beneath it. Didn't take his advice at all. Saw better opportunity and the cheap calls at the time. So I didn't let my winners ride. If I would have let my winners ride, I think my account would have went from 1,800 to nearly like 50,000. So that one kind of hurt. And since I gathered up on positions that seemed cheap at the time, I ran my account into the ground. I believe it bottomed out at like $600. So what I learned from that, just never add to losing positions, especially considering the market that we were trading in at the time. No one knew what was happening. Position size, that's a lot. Don't overposition your account, because if it seems like something that's going to take your account to an insane level, it's probably going to also drive it down an insane level. And usually that's the way it ends up working out. One trade should never bring your account to the ground like it did mine originally. And always, I mean, anything can happen. Any news headline came out. You saw on Monday how everything kind of fell based on a simple news headline, and the market really didn't know what to do about that. So that really good instance in having some available buying power. So yeah, once I went down to $600, I kind of just stuck to what originally got me a little bit of money. So I believe it was like a JP Morgan trade that came out. And I doubled my 600. So I got to like $1,200. Then a SPY put came out expiring in like 2 or 3 weeks. I got in that, quickly doubled that. And then after that, I was like, well, these solid golds, like they're going to get a little expensive. They take a little bit more time. So I was wondering what could I do in order to get in these unusual plays and not risk them expiring worthless. So I kind of developed my own set of rules. I look for certain things in the UAs that I don't get into every single UA that Shark does. He knows that. Not saying his or anything, nothing is wrong with his. I just have my own specifications whatever I look for whenever I am entering a trade. So from April 14th to July 14th, I went from $600 to nearly 50,000. There are a lot of times that my account would be down, or positions would be down nearly 45, 50%. I've seen them go down as much as 85 and still come back and be 100, 200, 300% gainers. Just got to kind of, if you stick and space out accordingly, you should be golden on that. So to my trading plan now, I never put 10%, more than 10% of my account in one position. Only 80% of my account is in unusual activity and solid gold trades. Honestly, if I'm going to go 10% on any trade, it's going to be the solid golds. Try to keep the UAs closer to 5% or lower. I always look for the UA ranking to be somewhere in the 70s. I try for it to be 80 and higher, and I'll never buy anything that's under $150,000. That flags the alert. And once again, like Shark was just talking about the trade of the week. What's the win rate on that?
It's over 90, even though the last 4 we've been 2 for 4. But yeah, it's over 90. Yeah,
so that's a fantastic trade, Dan, and also kind of improves your technical skills, and you can slowly build upon those by watching that. And then 10% cash. Cash is always a position. Never can go wrong by having some buying power. In February, it would have been really nice for a lot. I imagine you guys had a lot of calls from the UAs and everything, but if you had a little bit in buying power at the time, you should have had at least 20%. Based on this, I'd have had 20% in buying power. So I could have used, I believe that we had a Texas Instruments trade that week on the puts, and I think that went for like 130, 150%.
Yep.
So that would have easily, even if I had all calls, I would have covered that, doubled my money on one position. I had 10% that I could have probably bought some UVXY positions with in order to hedge my account.
Right.
So that's my trading plan right there, and it's always subject to change as we continue trading and stuff. Yeah, but in the end, like, I'm 18. I've been doing this for under a year, and I'd consider I've had pretty large amount of success. I mean, we all have learning experiences. We all have things that we can improve on. But anyone can do this. I mean, you don't have to be good at math. You don't have to be good at anything. If you can just manage your risk, you will be completely fine in any of this. And also like a trading plan, like ever since the trading plan, that's when my account has went to insane levels. Kind of got to watch the market sentiment, because once again, like Monday, I thought if you would have asked me on Monday, I thought we were going straight up the rest of the week. Obviously, we were far from that. And then also the chat, like I've learned a lot of stuff in that chat. I was actually considering quitting back in February when everything happened, kind of went to crap. Then I talked to Derek about everything, and we were just talking. He's like, dude, you're a young guy. Like, you have a lot of potential. You shouldn't give up on this. Just kind of focus what you did wrong, what you could have done differently, and then improve upon that. And every day, like even today, I'll ask questions and I'm learning something new. And the biggest thing for me is just emotions. If you're up $5,000-6,000 on the day, it's just the same thing as if you're down $5,000 or $6,000. You just can't really let it affect you. You're going to make poor decisions. You're going to add on to losing positions. That's not something we need to do. Because we're in it for the long run. You want to trade another day. But yeah, that's what I have. Do you guys have any questions?
That's great. So I'm going to ask the first question. So back when you hit that Tesla, and I remember, what was it, 500? You put 550 into it, and then it went to what, 12,000?
It was something crazy like that.
Right. So then,
it's been so long ago, I don't even remember.
So then, how if you can recall, when things turned around and went against you, like you were saying, what did you catch in terms of your emotions? What did you figure out? And I know you spoke with Derek about things. What did you figure out? What was the difference that you figured out with your emotions and how you were able to control them?
Well, in that time, I literally thought everything I touched was going to the moon every single time. I thought I couldn't make a bad trade. Quickly learned I can. I went from $500 to 12,000. That's obviously a big deal off of a single trade.
Yeah.
Something, especially as a young person, I feel like it's hard not to get your emotions involved. It's just the amount of excitement going in. Then you went from being able to open up maybe like 5 or 6 positions to being able to open up nearly as many positions as you want.
Right.
It's a very, very quick turnaround, especially whenever your account. That's what happens with most options. It's like with the accounts and everything, you're building up money so fast that you don't even realize how much you have or what you can risk, what you can't risk.
Mm-hmm.
Because the more money you have, you should be risking a lot less.
Mm-hmm.
Whenever you're trading at lower amounts of money, you're kind of, it is hard. It's hard getting the account rolling, but once you get it rolling and kind of figure out what to look for, you're going to be fine.
Yep.
But yeah, no, definitely learned a lot from, that's probably the best thing that's ever happened to me, is making an insane amount of money off of a single trade and then it going to absolutely nothing.
Well, you've made a heck of a recovery and you're definitely growing as a trader. So any of you guys that are on here have questions for Trey, put them in the chat, please. We'll read them off and Trey will answer your questions, because it's always good to hear from you guys in terms of, how things are going. How do you deal with this? How do you deal with that? And then hearing from a fellow trader, not just me and not just Derek, yeah, we've been doing it a really long time, and You have all this experience, but it's really good to hear from one of your counterparts that's right there with you, and he's in your age bracket. Like Trey's 18. He hasn't been doing this forever. All right, guys. So, do you guys have any questions for him? You guys really don't have any questions for him? All right, Trey. Can you see that question from Dan?
Yeah. What do you look at on a smaller time frame to hold swings longer? What exactly do you mean by that? Do you mean as far as like running it to the expiration, or?
Dan, are you talking about like time frames on the charts, like 5 minutes, 15? Okay, that's what he's talking about.
See,
So when you're looking at for yourself, Trey, which time frames are you using for swings?
well, see, I personally, I won't use any, if it's like most positions we have are going to be a month out to nothing really is going to come out that's less than 2 weeks away. So I'm always looking at least a 10-day chart. I pay attention to the 20-day, the 50-day, and the 200-day moving averages. And that's pretty much what I base my sentiment on, but these aren't technical trades usually. So usually going to be news written, or it's going to play into account of how the indexes are moving. It usually never really is a technical trade as far as the UAs go.
Okay. And are you doing daily charts when you're looking at those?
Yes.
Okay.
Like, for example, like PDD does not look good. It looks very bearish at the moment, but once
Sure
again,
does.
it's not a technical trade. It's an unusual trade.
Exactly. It has a mind of its own.
Let's hope so.
That's for sure. Dan, does that answer your question? Robbie asked, how do you manage exiting your positions?
All right, see, that's a great question. So I don't know what brokerage you're using. Personally, I use Thinkorswim. So I can literally go in, and the second I buy the contracts. I'm not familiar with how Robinhood works. So I'm just going to pull it up here, for example. So let's see. I'm in Baidu. My average price I got filled actually a little bit, slightly under what the big guys were getting in at. So I believe they got in around 200. My average price is 186. So I'll go to close position, and make an order that's good till close for 100%. Say it's up around 50%, it's moving kind of flat. Sometimes I'll exit half the position there just to get a little bit of my capital back and put it into something else. Most of the time, I'll just leave it in there to 100%. But always, if you're training on Thinkorswim, make those orders good till close, because then you'll have to go in there and reset them every single day.
Right.
But yeah, no, that's all I usually look. That's the first. It's not usually a technical exit. It's just kind of a target exit.
Okay. So let me ask, and I'm just going to follow up on that one. So when you have a trade and it's not an unusual, or it's not trade of the week, and let's just say it's your own trade. Let's say you picked your own trade. What are you looking for yourself in terms of getting out of the position? One to the upside, and then two to the downside. Let's say it's just your own play.
All right. I mean, I wanted to trade above the moving averages. That's the first thing I'm looking for. Another thing is volume. If the stock's trading on low volume, but it's still rising up, usually its shooter volume is going to come in and drive the stock in one direction. If it's above the moving average, it's usually going to end up curling up a little bit more. But to the downside, I honestly don't really have many trades that'll be to the downside, but it's the same thing, just the opposite.
Okay. Don't worry.
The moving average.
Those trades will come. Don't worry.
The moving average is honestly that's the biggest that's the best technical you can use.
Okay.
So we use on Trade of the Week too. So.
Yep. And then just to remind everybody, what are the moving averages that you use again?
What do I use?
Yeah.
I think I use the 20 and the 50, but I try to use the 200s easily. Like, other than stocks that really rise super fast, that's a very, very important one to watch. That and the 100.
Okay. So those will be your swings. And then if you do a day trade, what are you looking at And just in terms of moving averages, just to give these guys, you know, an example, if you're doing it, what are you looking at on a day trade? And have you done many of them?
I see that's the thing. I really haven't done many.
Okay, fair enough.
That usually focus like most of that's the thing. Like that's why I want to tell people everything. Like these unusuals are not any like that. 80% of my accounts based on unusual activity. I don't feel comfortable trading technicals. I'm trying to learn as much as I can about it. That's not something I'm really comfortable putting more than 20% of my account or 10% of my account on. The unusuals are like anyone can use them. It's really easy to get the alerts. Yeah.
Okay. And now when you're doing your moving averages, are you using the SMAs or the EMAs?
I'm using the SMAs.
Okay. There you go. So there you go, Derek. Because I know Derek asked the question because I'm sure other guys just didn't ask. So, but that's good. That's good to know. Because what you want to do is when you're trading, you want to use the same thing over and over. Like you have a plan. So now you have a plan. You have a plan for your OAs. You have a plan for, you know, other trades. You know, that's such a great thing to have. Now, let me ask you a question. I'm going to put you on the spot and make sure you tell me the truth. Do you have a trading book?
I don't. I have one. Literally, it's laying in my bonus room, and it has a couple trades in it. And then, but usually the thing is, I'll be out and like I'll get an alert. I'm not writing anything down. I'm just going in there, getting an alert. I'm on the road. I'm golfing. I'm doing something.
Okay.
I'm not even in the house.
Gotcha.
You can pretty much do it from anywhere. It's not.
You really can. You really can. And especially with
you're not managing these trades like I've woken up. I mean, I always wake up at 9 if I can. I've had one time where I slept through 9 o'clock, and I was pretty scared because I think I had a position in PDD I'd missed out on. I had my sell order set already, and it gapped up, so I ended up losing like $180 per contract.
Right.
On that, so that kind of hurt. I mean, it was whatever. Came back.
Yeah. Does anybody have any other questions for Trey before we let him go and move on? If you have a question, chime it in. Trey, so if anyone's going to ask a question, I'll let them fire it in. But the last thing I'll ask you just to share with everybody is when your account is turned around and it's not going in your favor, right? Let's say you've got like 6, 7, 8 trades in a row and they're just not going your way. What's going through your head and how do you deal with that?
I mean, it's happened before. It's certainly a scary moment. I try to think about what did I do differently? When did I enter these trades? What was the market sentiment then versus now? Usually that will have a lot to do with it, because if you buy a lot of things on one particular day and then a news headline comes out, the whole market has changed its thinking. That will easily explain why you may have 6 or 7 losing positions. Did you enter those 6 or 7 positions relatively around the same time period? Or so do you plan on exiting those trades for probably massive losses, or are you going to hold through? I always hold through. We've seen so many times trades be down 85, 95. I haven't had one personally, but I've heard of people having trades down 98% and then going into expiration date being up 100 or 200%. It's crazy.
We've had them. Yeah, they're pretty wild.
Yeah, no, I thought the AXNX one was going to pull back out, but it never did.
Nope. But yeah, that's the game we play here. That's the game we play here. All right, so there's no more questions. So Trey, I'm going to say thank you very much for.
Hey, dude, thanks for having me.
Thank you for putting this together, and sending this to me and working on it with me this weekend. And thanks for taking your time out and showing that you too are a real person. You're not just like a robot behind a computer, you know. And it's great, you know. It's great. You're 18. You're learning this stuff. It's just it'll pay dividends down the line. It's going to be amazing. So I wish you continued success. Welcome to lifetime membership. This was your first week, and it was quite interesting. That's for sure. And yeah, just keep up the good work and keep asking questions. And you know, the guys that are in the shark ed, you know, they look up to people who have success, and, you know, they look up to people who have had success and then they failed and then they were successful again. So, you know, at least those are the people that I look up to. I look up to people that they've succeeded, then they failed, and then they kept on and they succeeded again. So keep up the good work. And thank you very much for joining us and sharing a little bit with us and answering a couple of questions for us tonight. So thanks very much.
Thank you for having me.
All right, buddy.